This is one of my favorite 1-minute trading strategy using only the 1-hour time frame to make analyses. To be able to understand this trading strategy very easily, you have to watch the video in the description below. It will teach you everything that you need to make entries. This video will be very easy to understand because I will teach you everything from the beginning till the end. And what I like about this trading strategy is that you can also use it with other time frames. But in this video I am not going to touch on that. The main focus of this video is the 1-minute trading strategy. So the first thing that you need is the higher time frame analyses on the 1-hour time frame. Then we are going to enter the trade on the 1-minute time frame. The first step of this strategy is to identify an engulfing candlestick on a chart. From here we can see that we have a bullish engulfing candle. So if you are new to trading, then in simple terms, as we can see, the green candlestick is bullish and the red candlestick is bearish. And the body of the bearish candle is smaller than the body of the bullish candle. The two candlesticks combined will be called a bullish engulfing candle because the body is engulfing the previous candle's body. In higher time frames, after we have identified the bullish engulfing candle, we will put a horizontal line on the previous candle's open. This will give us a signal on where to buy in the lower time frame. You will see clearly when I start demonstrating on a real chart. And we also have to know when to stop trying to force the market. This is where we will put another horizontal line below the bullish candle's low, or if the previous bearish candle is having lower low, we can also put that invalidation level on the low. This will help us to know when the market has failed this signal. The main purpose of this trading strategy is that we need to catch the next candle's low. Like from this example, we will try to catch this low of the candle. And this can also be done on daily time frame as our higher time frame, and using the 1-hour time frame and the 30 minutes time frame as our entry time frame. But this will be on another video because I will cover most of the things in there. Now when we move on to the lower time frame, we will see that we have a line that we made in the higher time frame. So the one rule that you need to focus on is that in the lower time frame, price must touch the line before looking to enter the market. And the one thing that I have noticed is that sometimes it does not touch the line. But if the price is close to the line, we can still try to make a signal on that if everything is aligning with our entry strategy. Now the next step is to find a demand zones below the horizontal line that we drew on the higher time frame. Then we will just wait for price action to come to the demand zone to confirm our entry. That is why I said that the previous video is very important to watch this video because you will be able to enter the market with a small stop loss. So now this is what you need to check if the next candle doesn't touch the horizontal line. Then this will make the whole setup to be invalidated. But in the future video I am going to show you how you can trade those kind of pattern because this video is only focusing on the 1-minute scalping. I will just give you one example at the end of the video to demonstrate that. Here is the bearish engulfing examples. Step 1 is where you will identify the bearish engulfing candle. Step 2. Draw a horizontal line on the previous candle's open. Then on the last one, if the market on the next candlestick, it doesn't touch the horizontal line, then it will make this setup to be failed. Now let's do some examples on a chart. And remember, after watching the video you have to go and back test this. Because I noticed some traders watch the video once without even trying to understand every rules of the strategy. You have to put some time on a chart, bro. Back test a lot, then come up with a solid reason before commenting. So now let's start with this example. The first step is to identify a bullish or a bearish engulfing candle. Then the next step is to put two horizontal line. And remember, we do this on the 1-hour time frame so that when we move on to the lower time frame, this can be very simple. This is how you will make your analyses. And key to know is that you have to choose the correct engulfing candle, mostly choose the one on a strong support and resistance. On a correction before the breakout. And when we move to the lower time frame you will notice that now everything is very clear, even without putting a lot of time on a chart. As we can see from this lower time frame 1 minute. Sometimes price action doesn't even touch the horizontal line that we have made in the higher time frame. So what we need to do in the lower time frame is to find the demand zone below the line and above the invalidation level. So let's find a demand zone on the chart. Now you might be wondering why I choose the demand zone above our line. When you do your back test you will find this kind of price action. That's why I have included this example in this video, because I know very well that if you find it, you will come back to the video and comment about that. Now the next step is to just make your entry on the demand zone using our entry strategy, which was explained in the video that I have recommended for you guys to check before watching this video. The next step is to wait for price to come to the demand zone. Then wait for bullish candle that doesn't trade below or close below the demand zone, to give our trade signal a little bit of an advantage over other traders. This where it might get a little bit confusing if you didn't fully understand the other video. After we have noticed that price touched the zone here and closed with a bullish candle, this will be the time where you will choose on how you would like to enter the market. From here I have used my favorite entry strategy, because I know that I will risk very small and the profits that I will gain will be very huge. Because this is a scalping video, you will only target at least 1:7 on every entry. And my advice to you guys is that always leave one trade running, because the market can sometime leave you with regrets. This is how your entry should look like only if you trade my favorite setup only. Here let's do another example whereby we don't use my favorite entry strategy. So firstly here on the higher time frame 1 hour we will start by drawing our horizontal lines. Now that we have both levels on the higher time frame 1 hour, we will move to the lower time frame and check for any reasons to enter the market. And what I like about this is that the market won't let you to enter it if there is no pattern that is aligning with our strategy. The only thing that you must not forget is that we will only look for demand zones inside the two lines. If you don't find any demand zones on a chart, that means the signal is not there. But sometime it can come after touching the line. So keep that in mind if you see that happening. Can you find the demand zone inside the blue area? I will give you some seconds to try and find it. As you can see, price just tapped the zone and closed with a bullish candle. But in this case is where you will choose on how you want to enter the trade. But to be honest, I won't enter on the close because I am always looking to reduce my stop loss as much as I can. If you enter on the close, your trade should look like this, with a stop loss below the demand zone. Or if you see price moving, you can also trade this setup here. I will just leave it so that you can study it. And the one tip is that the zone is wick to wick. For this example I will try to make more trade examples on this chart. But before we begin I will like you to help the channel by subscribing. Hey bro, just do it, is free. Like the information that you are getting from this video. And also if this video is helping you a lot, just leave a like and a comment, because I always make sure that I respond to everyone. I will try to explain everything from this highlighted area. In the 1 hour time frame we always start the same way, by plotting our two horizontal line on the chart. As we can see, things can get a little bit difficult. But we can also notice in this lower time frame that we are bearish. But the in-between area is very wide, so that means we will get a lot of fake signals. But we will just do this in the perspective of our eyes. As we can see, we have two zones here, but on the first zone the market just traded above the zone, just to take some liquidity above the previous high. Even though you wanted to enter the market, it didn't even close with a bearish candle on the zone. Price just shoot higher and closed bearish on the next zone. So in the future I am still going to make a video about liquidity grab and how to see it before it can even happen. Then when market closes with a bearish candle on the zone is when you can enter on the close or the retracement. And as we can see, the market just started to go lower. But what if you have missed the first entry? We can still try to do something about that. In the beginning of the video I have mentioned that sometime price can make a signal after it has touched the line. So I will just show an example in this area here. If you know how to read the market structure, you will just understand this clearly. But because I want you guys to understand everything, I will always make something for you guys to see things clearly. As we can see from here, the market never made a new higher high. It just dropped lower to make a new lower low. So in this case we can also see another supply zone. So we will just draw the supply zone and wait for the market to close bearish without invalidating the zone. What I have noticed the most is that in the lower time frame, the market likes to just move without any retracement entry. Unless if you can scan all the pairs to find any signal, then I can recommend you to do so. Before we can continue with more examples, I want to give you a task. Just look at this chart, then I will move on to the lower time frame. Then if you have watched the video in the beginning you will understand this pattern clearly. Then I will also show you guys the lower time frame. This is our higher time frame analyses. And we all remember that we will only try to make a setup on those level. I will zoom in a little bit so that I can explain this clearly. On the first one, yes, I could have tried to take this trade. But with proper risk management I can try another one which worked perfectly. And sometime price like to just go like 0.1 pip above the zone. So in that case I will just take the trade. Because I have seen it happening a lot of time. You can also pause the video here because it will help you to know the key entry rules of a sniper entry. Before we do the last example of the video, I would like to notify you guys that all the social media links will be available in few days, so keep checking in the description below so that we can grow the community together. The Telegram group will be the first one because I want to teach you easily. And also you will get a free PDF that I have made. So stay tuned. If you are using trendlines, I want to advise you that always keep things simple. Don't overcomplicate things. So from this chart we will start by drawing our trend lines. Now that we have our trend lines we will just move on to try and trade before the breakout. Like from the previous video I have mentioned that always try to enter before the breakout of a correction. So in this case we will find bullish engulfing candles before the breakout. Now after identifying our bullish engulfing candle, we can see that price never touched the line the first time. But it touched when it was trying to break out. So we will move on to the lower time frame with the mind of the first bullish engulfing candle. You will notice that price never confirmed anything until it tried to tap the second bullish engulfing candle. The next step is to find a zone in between the areas. So we will just draw our demand zones. On the 1 minute time frame we can see that we have this demand zone. But if you noticed when price come here, price just shoot lower without confirming anything. But if you think outside the box you would notice that price was just trying to take some liquidity and test the first bullish engulfing candle in the higher time frame. We will try to make a setup based on the retest of higher time frame engulfing candle. The market retested the higher time frame engulfing candle here. Then after that we can see that price formed a structure plus a demand zone, meaning we can still enter the market. Then we will enter the market when this candle closes. Because you will be entering before the breakout, we can hold the trade even longer to make more money. For take profit just focus on previous highs. Or 1:7. Don't ever make your signals to be 1:2. That is risky in all aspect of trading. If you have enjoyed this video then I guess I will see you on the next video. There is still awesome content that is still pending, so stay tuned. Before I leave, always use a stop loss, bro.